Hello guys, welcome to Finstock BizTalk. This is a channel where we talk about businesses. We give you tips and insights on how to run, start and manage your business. We also talk about online courses. And today we're going to be talking about Forex Trading, a beginner's guide. And we are starting with, let's learn about Forex Trading. So foreign exchange or Forex Trading is the process of buying one's currency and selling another with the goal of making profit from the trade. So Forex is a portmanteau of the word foreign and exchange. According to 2022 triennial report from the Bank of International Settlements, the daily global volume of Forex trading reached 7.5 trillion in 2022, that is 2022. And so what is the Forex market? So the foreign exchange market is where the currencies are traded. And this international market, most unique aspect is that it lacks a central marketplace. Instead, currency traded is conducted electronically over the counter, OTC. This means that all trading is conducted electronically, and this means that all transactions occur via computer networks among traders worldwide rather than one centralized exchange. And then you find that the market is open 24 hours a day, five and a half days a week. And currencies are traded worldwide in the major financial centers of Hong Kong, London, New York, Paris, all those. And so how does the Forex market work? The Forex market is the only truly continuous and non-stop trading market in the world. And in the past, you find that Forex market was dominated by institutional firms and large banks, which acted on behalf of the clients. But now it has become a more retail-oriented in recent years. Traders and investors of all sizes participate in it. And so where is it? Let's ask ourselves, where is it? So we find that an interesting aspect of the world Forex market is that they have no physical buildings, and which will function as trading venues. So instead, you find it's a series of connected trading terminals and computer networks. So market participants are institutions, investment banks, commercial banks, and even retail investors from around the world. And who trades in it? So you find that currency trading was difficult for individual investors until it made its way onto the internet. So most currency traders were large multinational corporations. We have hedge funds and high net worth individuals, because of Forex trading required a lot of capital. So you find that commercial and investment banks, they still conduct most of the trading in Forex market on behalf of their clients, but there are also opportunities for professionals and individual investors to trade one currency against another. So Forex trading involves buying and selling different currency with the aim of making profit. And at its core, Forex trading is about capturing the changing values of pairs of currency. For example, if you think that the euro will increase in value against the US dollar, a speculator may buy euros with dollars, and if the euro values rises on the relative basis, you can sell the euro back for more dollars than you initially spent, thus making a profit. So in addition to speculative trading, Forex trading also uses the hedging purpose. We find that hedging in Forex is used by individuals and businesses to now protect themselves from adverse currency movement known as currency risk. For example, a company doing business in another country might use Forex trading to hedge against potential losses caused by fluctuations in the exchange rate abroad. So by securing a favorable rate in advance through Forex transaction, they can reduce the risk of financial uncertainty and ensure more stable profits or cost in their domestic currency. So this aspect of Forex trading is crucial for international businesses seeking stability in their financial planning. And Forex trading features favorable aspects like high liquidity, meaning it's easy to buy and sell many currencies without significant change in their value. So additionally, you find that traders can use leverage, which allows them to control a large position, which is relatively small amount of money. However, you find that leverage can also amplify losses, making Forex trading a field that requires knowledge strategy and an awareness of the risk involved. So that is more on forex trading. If you want to learn more about forex trading, you can do this at Finstock University College. Visit their website at www.finstockuniversity.com or call them at 0703 313 722 or send them an email at info@finstockuniversity.com. Until next time, goodbye.